Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This is the Moving Iron Podcast. It's brought to you by John Deere. I've got Greg Machinery, Pete Peterson on to talk about what's happening in the market. Greg, how you doing today?
I'm doing well, Casey. How about you?
Doing good, man. Doing good. You got some fall weather up there now? Some brisk mornings.
We had a couple hard frosts here the last few days, and it's starting to feel like Halloween time.
There you go. You getting the 60-degree days and 30-degree night type things, or are you cooler than that? A
little cooler, kind of low 50s for highs up here this week, but haven't had frost the last few nights. But I think we got some rain moving in here the next early this afternoon, maybe into tomorrow, so we could use it. We're pretty dry up here, actually.
Yeah, this was the first morning where I started my pickup, and there was ice on the windshield. So
there you go. Hey,
we got it.
Welcome to winter.
That's right. That's right.
Officially begun.
That's right. Well, we got a lot of stuff happening this week, Greg. We got, if you take a look at all the news stuff we have, so the Federal Reserve is supposed to lower interest rates by a quarter point, and a few other things there that kind of have some monetary repercussions. You've got the federal or the Supreme Court's hearing the legality of the tariffs, whether that's good, bad, or otherwise. It's some all or none type of thing, what that might look like. And then you've got President Trump and President Xi getting together and talking about all the stuff they can work out together on a trade deal and what that looks like. So all this stuff has a huge impact on the markets. If you look at where markets are at right now comparatively to where they started out at the beginning of the month, we've seen probably close to almost 20 cents movement right now. If you look at where the market's at right now, we're about 431 and a half or so. And this is Tuesday morning that we're recording this. But if you watch how those things play out, I'm a firm believer in 25 cents gets people moving in a direction, and 50 cents starts decision-making processes start to happen. I mean, Greg, as you look at this, and you've been doing this a lot longer than I have, if you look at these situations where they're at, we've seen some peak ups in a time frame where there's not a lot of time to go out now and get with someone and say, hey, I want to have a big sell right now because of where the price is at. There's just not enough time before the end of the year happens. Not saying you couldn't do it, but it's just you'd be stretching it pretty thin to make that work. In your experience, when you see stuff like this happen in a quote unquote depressed market, when you start watching these movements of commodity prices happen like this and people kind of start perking their ears up a little bit, how does that typically affect what you would see out of a normal, end of the year, fourth quarter auction buying cycle?
35 years, Casey would tell me that that upside movement is translated to the auction market very quickly. The downside movement, surprisingly, not as quickly. You'd think it would be reversed, but it just isn't. So any little jump. So I think Trump and Xi are supposed to meet Thursday and talk.
Yep.
If there's any news trickling out about soybean purchases, my gut there would tell me that strictly in terms of used equipment auction pricing, that it wouldn't take too long before you'd start to see a little of that, just more positivity, optimism baked into what people are paying for good use. Now, that said, there's just, like you opened up with, there's so many layers of moving parts and uncertainty that strictly from a business standpoint, whether it's a farmer or, Main Street business, whatever, it's kind of made everyone kind of wait. And, uncertainty is not good for business planning. So any types of little certainty, like, the Fed, everyone expects they'll do what they're going to do. And I just think we've been waiting for some type of positivity with some concreteness to it. Not like a blowing in the wind, like, hey, Tuesday It sounds good. Thursday it's doom and gloom. It's like, we're tired of that. We just want let's just get some firmer footing underneath. And then I think farmers can make some, better long-term decisions.
Yep. In your experience, when you've seen stuff like this happen, where it happened this late in the year, it's not like you can't go put a few pieces on on a sale right now.
Mm-hmm.
You can call your local online sales guys and auction person and say, hey, I want to put this with the next sale that you're having, and whatever, and you put a few pieces on there. What I'm talking about is the full blown, hey, I'm selling 10 combines and 20 tractors type of deal, pushing
Mm-hmm.
that stuff through. So in your experience, when you watch this kind of stuff happen and you see this what's that? How do you see the first quarter of the year playing out comparatively what you would have seen? Hey, if things would have just been status quo going through that last quarter.
Well, I think my experience would tell me, again, these whatever the developments are. I remember back late 2016 when Trump was first elected. So we know that in the used farm equipment space, early 16 was or late 16 into 17, there was nothing shaking. There was no reason really for pricing to move, but it moved. People felt a little more positive, right or wrong, whatever reason, about that unexpected somewhat result. So, pricing wise, again, any injection of positivity, the pricing thing can move quickly as it pertains to number of auctions and people's planning. I think there we're talking about more of a longer term kind of this meat grinder we've been in. So that basically that 14.5% jump we've seen in the raw number of machinery auctions this year through the end of September, I think those forces are still at play. And, I think like we've talked about, I think we're going to see more auctions the next 6 to 12 months. I noticed just yesterday, starting to see this a little bit more, but right on the sale bill, it says court ordered, which, you don't like to see that, but
Yeah.
is what it is, right?
Yep.
So those forces are what they are. And I think that equity drain has been pretty real and severe. So I think that that's been a driving force between working towards seeing more auctions here last 6 months and probably more come in the next coming months, I would say.
Yep. What I like about this, I think there's a great opportunity for value, right? As you look at stuff move
Mm-hmm.
through, and I think you're going to see, when I mean value, I mean, like, I think the market further talks about what we've, does what we've been talking about, right? Well, it gets
Mm-hmm.
you see some solidification there, and you really start seeing the ratcheting up of value, right? And there's not as much margin leak and those kind of things that are out there when you start looking at how this stuff comes together. I've always watched these things happen, and when I've been a part of these kind of in the scenarios where you watch this kind of stuff happen, it's amazing how fast the mindset switches, right? When it goes from I want to go back to 2018, 19 time frame. I think it might have been maybe, yeah, I think it might have been 20 maybe. Anyway, price of corn was 350. It was really, really bad, and it jumped up to 375, and a bunch of people went and sold, and it got, I don't know, it went off. I think it was right before COVID, so it went off into like $6 range pretty quick. But watching that movement of just a simple quarter or 50 cents in that time frame, how much that changes someone's mentality to what they want to do and what they want to, and their buying cycles and what those look like. So this is one of those periods in time where there could be a huge swing in the market, and that's going to change how people come to the marketplace, how they view the marketplace, and what they decide to do, especially with Section 179 in the situation. So there could be
Mm-hmm.
some of that driving that. There's not enough out there, I think, to make that a world of difference. But how that changes 26 and if prices stay up and they kind of hold, then there's not a big reaction back down. 2026 could be a little better of a catalyst than what I'm anticipating, right? It could see a stronger first quarter, which I think in these situations, I've always noticed this, where you see coming out of something like this where that strong first quarter's at, but then planting season and that spring harvest season kind of pull back a little bit, kind of see what happens, get my footing back in there. And then you start looking at that August, September timeframe again as some pre-fall harvest buying takes place. You see a little stronger there, but then again, it pulls back during harvest. And then you start seeing that November, December, late October timeframe really take off and move. And once you hit that stable marketplace, September, October, November, December is a buying is a strong buying period, right? And kind of feel like 26, if all this stuff happens like we're seeing it happen, and all things come true that they're talking about, and it works and it holds like it's supposed to, you could see something like that. I mean, is that some of the experience you've seen as well, Greg?
Yeah, you just described kind of the pattern, generally speaking, especially over the first 25 to 28 years of tracking this stuff. We got into that COVID period, and I mean, that was so unusual. And those 2 years
Right.
afterwards, that they're just kind of an anomaly. But yeah, it used to be, the Q4, end of the year, November, December, Section 179, you'd see strength there. So auction prices would rise a little bit. Then I always watched when the calendar flipped to see would that hold. And when things are firming up like we've been seeing the last year with auction pricing, typically then calendar flips and you kind of hang in there, and then that little bit of pullback, like you say, kind of in the spring, kind of that April into May into June. Hey, we're getting the seed in the ground. I hope it's a good year. It's awful dry, whatever. It's just kind of human nature. And I think tracking this auction data all these years, Casey, the thing that I keep coming back to, which I love, is that auctions they're emotional human events, and we're human. So we're all dealing with all these zillion different forces coming at us and realities. And it all gets swirled in there. And like I say, it's been really interesting. Any little positive, once you have footing, like we've established here since late February in this market with used equipment, which has surprised a lot of people, me included. But once you have that, then the little bits of positivity show immediate effects. The one thing I would say I'll be curious about this now on the livestock side, on the beef front, that's been where the money is. Now, of course, the last 10 days, we've had an interjection of uncertainty, to say the least, poured on that. So that was the area, November, December. So loader tractors, hay equipment, that kind of stuff. In terms of Section 179 year-end spending, that probably would have continued up. Now I think you just poured a little, how this is going to play out. So I don't know if that'll be tamped down a little bit on that stuff. We'll have to see. But historically, again, the positivity news results really quicker on the auction side. In fact, I remember it was in that period, kind of 16. It was in one of those flat periods over the last decade. I remember being out at an auction. There's a farm auction just up the road from me. It was up by Red Wing, Minnesota. And I think the USDA news had broke that morning, and there was a big jump in the market. And, I'm looking at comparables coming into the sale on all this. It was nice stuff. Guy had good equipment, and everything just popped. I mean, people were looking around. They were coming up to me going, wow, was that high? And I was like, yeah, that was high. That's tends to be what I've seen over the years. Positivity gets injected quickly. Negativity, I think, as humans, we absorb it, but go, well, we'll see how that plays out. It just takes longer to set in. Now, low price corn and soybeans sticking around as long as they have, that's has been worked into people's views on equipment. But it is interesting. We've talked about where the money is flowing, even on the grain side, when it's difficult like this stretch here. And just this last week, we've been talking about good condition pre-def stuff, how that's been selling. And just this last week, we had more. We had that Sonder 7810 two-wheel drive that brought $158,392. That was a sale in Viroqua, Wisconsin last Wednesday. It was an 89-year-old farmer that had just had it in his shed. And again, that set an auction record on a two-wheel drive 7810 by over $45,000. Same day, we saw a Case H 7120 front-wheel assist that Big Iron sold. I think that one was out of Stratford, Iowa. That was a retirement sale for Rodney Patterson. And he had 4,286 hours on a 90 model 7121 for $61K. Second highest auction price ever on a 7120 with over 4,000 hours. So good condition pre-def stuff. That's where the money's been flowing. So it's fascinating to track this stuff. And yeah, this week, the next 10 days is going to be really interesting, because now we're drifting into that first part of November coming up. And I've always told people, if I were having my auction, I would always go for about November 7th to December 20th based on the data. So it's going to be interesting to see if will the prices go up with some of these positive notes, or will they hold? Time will tell.
Yep, time will tell for sure. For sure. Yeah, it's been it's definitely so. I mean, I think what we've talked about a million times on here, but I mean, just I feel like we're at a bottom and we're working our way through that. And then, the auction data that you're talking about is pointing towards that. The retail data is coming down, and we're seeing where the retail prices are dropping, and which they needed to get back in the line with where the market was at. Unfortunately, I mean, there's losses associated with all that, so that's the hard part of that. But when you are going through this time frame, these transitionary periods are just like in anything. The volatility that's there gives you opportunity, and looking at how that opportunity plays out, I feel like we're going into an opportunity this through this end of this fall into December here, where there's going to be a lot of opportunity to buy some machinery that's going to be good, clean machines that are going to be available. And I think you're going to get it for a cheaper price now than you're going to get it for first quarter of 26 or even the second quarter of 26.
Well, we drift into the prognostication business. I'm so old. I remember Tonight Show, Karnak, Johnny Carson and Ed McMahon doing their sis boom ba, their predictions. But I would agree, Casey. I think that the data is saying this footing we found since February, and again, just reading the tea leaves going forward, things are stacking up towards again this limited production of new equipment. Dealers have worked down their level of excess used. It's still higher than they want, but it's a much better position. And I think, if you extrapolate this out 6 months, 12 months, 18 months, whatever point, if corn and beans jump higher and kind of find a little bit more positive level there, the scary part for me is we're going to sort of be looking at what we saw in 21, I think, of kind of a gold rush of like, hey, I haven't updated my whatever combine tractor planner for 3 years now. I need to do it. Dealers they're not going to have much allotment from the manufacturer. And of course, we know what happened to used equipment prices back then. So that's the backside of what you just said. It's like the next year is really opportunistically a great time to be an aggressive buyer if you can.
Yep. And I talked about it before, and I'll talk about it again. Go back and look what happened in 2008, 2009, 2010. That was all because of manufacturer pullback and the ramping back up. It took till 2011 before you saw a real big movement in the marketplace that brought back in a bunch of used equipment up. So you had about 18 months, maybe you could even stretch out to 24 months, depending on how you want to measure it. But at the end of the day, what you had happen was because of supply and demand and the lack of new equipment being sold, bringing back in that late model, low hour stuff, that 1 to 2 year old stuff back in the marketplace. You really saw a lot of things get taken off the market. And I'm right there with you, Greg. I think you're setting the table right now for an opportunity to burn off some of that late model, low hour stuff. And if you can do it now or in 26, I think it's going to be your best opportunity to get a quote unquote bargain on the stuff when you start looking at what'll happen when you go into 26. The pricing is going to start to change. And, just look at, we've talked about it on here before, look at auction values between today and what they were this time last year. They're significantly higher than not like hundreds of thousands of dollars, but you're seeing 5, 6, 10% higher in auction values year over year. And that's really becoming back to, again, stability of the marketplace and some supply and demand, what's available out there on the marketplace right now.
Well, I completely agree with you, Casey. And the thing I focus on is, you referenced that period back, 7, 8, 9, in that period when manufacturers pulled back their production and then all of a sudden, trying to ramp back up. Well, let's think about, so that was 15 plus years ago. Think how much more aggressive the manufacturers have been in the pullback this time. Yeah, I mean, they just shut off.
More aggressive.
It's not even to say night and day doesn't even do it justice. They've just quit making it, and they put all the. I've never seen manufacturers over the last 18 months be more proactive helping their dealers. So even the manufacturers are, going, okay, how can we help you folks move some of that 1, 2 year old, 3 year old stuff off your lot? And that's what we saw in 24 but that 150 to 160% jump in 0 to 3-year-old units sold at auction. So
Yep.
this is the part, again, I wrote about it early this year. As a farmer, you know what you know what your dad went through, your grandpa went through in these cycles. And the thing that's different coming on the far end of this cycle is that the manufacturers have never been this proactive in terms of shutting off the spigot.
Right.
They just haven't been making it.
Yep.
So that's what we're talking about here now. In this drift out period before things take off, whenever that is, it's really your opportunity. Because again, to me, it's just shaping up exactly like eventually what 2021 was. And that was no fun for anybody if you wanted to get a piece of new equipment or use, because then you were paying double, triple premium.
Mm-hmm.
And it feels weird to talk about this when things are difficult like this. But when you analyze any market and you're trying to look ahead, and again, predicting is tough, but these patterns can, if you pay attention, they tell you things. And again, it's
They do.
to ignore them and to assume it'll be like it was 40 years ago when that, in the 70s, when that took off in 73 and then shut off. I mean, here's another little confirmation of the difference. I remember writing that 2015 was the year of the lease.
Yep.
So why was that? That was because when the spigot turned off, whatever, mid-13, corn and beans fell, and then manufacturers were still producing a level of new equipment, so the dealers had all this new stuff. So what are we going to do? Well, let's lease it. Okay. With new equipment, how much talk have we heard about leasing the last year? It just hasn't been I'm starting to see some smart dealers now with lease programs on some late model stuff, used stuff. But yeah, to me, it's just a reflection of manufacturers, and they can do it because there's fewer dealers, honestly.
Yep.
But that's what they wanted. That's what they were shooting for. Basically, was a more efficient, holistic equipment market, the flow of new and used equipment. And we don't have to like it, the fact there's fewer dealers around or whatever, but if you pull back, it is a way more efficient space now. And you need to make decisions based on that truth, not on what was in the past.
Yep. Yeah, the leasing market, well, it was the wild, wild west back then, man. How the rules have changed since 2015.
Right. Yeah, you went through sitting in your chair as a used equipment manager at a large dealership, going through these ups and downs. I mean, wow. I always felt bad for you guys having to put your head on a pillow at night. Well, just like a farmer is like, oh my God, the things you're having to deal with. But it's I just think it's different now going forward, and it's no less stressful, but it's just the market is more efficient. And like I say, that 150% jump in 0 to 3-year-old stuff sold at auction last year, to me, that was dealers and manufacturers going, okay, what's the problem? The problem is there's too much late model stuff on our dealer lots. Let's move it. So, I mean, dealers lost oodles and oodles of money last year moving that stuff, trying to get ahead of the market. And this year we've seen a 60% drop in that stuff. So,
yep.
It is what it is.
Yep. The one thing I liked about, Used Equipment Guide this time, when these kind of times happen, is, desperation drives innovation, right? So it made you think about what you're doing, your processes you had in place, and he had to be a lot more in tune with what was going on, because I mean, my running joke for the longest time during basically 2008 through 2012 was you could dial a wrong number and sell something to somebody. It was that easy. And then when it dried up, the leasing thing came around, and that made you could really, because you're talking payments then, right? That was the days of the $12,000 a year tractor lease, and you start looking at some of the stuff, and it was so cheap that we had guys that had a guy one time that parked his fleet, and then part of his fleet anyway, and kept what he had in the barn, and then got some really 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 cheap lease payments, and ran that for a year instead of putting stuff that he had on this other stuff. So there's just a lot of opportunity out there to take advantage of, and those times will come back, but you just need to be ready for them and start thinking about it right now. Like, okay, if these things happen, start wargaming that stuff and start, whether you're
Right.
on the farm or at the dealership. If these things happen, what are we going to do? And I think that having that plan today and knowing what those scenarios look like, and then you can adjust those scenarios as needed, makes
Right.
that's how you win. That's how you take
That's how you
advantage
win.
of a situation. You know what I mean?
That's
Those are
how
the
you
things
win.
that you don't wait till when everybody else is doing it, right?
Absolutely.
Know what you're going to do as you walk through that door, right? And bam,
Right.
these are the things. These are the 4 or 5 things I've thought about through, and I put these all on a piece of paper, and I've kind of war gamed those through and figured out if these things happen, I'm going to do these things, and when they start happening, you got to start making those decisions and moving forward, and that's how you win on building strong equity in your machinery fleet. That's how you win, getting top price for your grain and those kind of things, like, and your cattle and whatnot. Like, that's really what it comes down to. And equity. Every banker that you talk to, you go and talks about your equity position. What's your equity position? What's your equity position? Well, this is how you build it, and these are the situations that you step into in those time frames. And I think we are going into that right now.
100% agree. 100% agree. I've been preaching it, and again, I don't like to preach. It's just I like you, we were talking off of patterns and data, and swirling it together with all the conversations we have with farmers, lenders, dealers. Now, the one thing I would say, I'll be really interested coming out of this as it drifts out. One thing I have not seen before is this level of farmer chatter in terms of assessing their equipment fleet and its age and how they, because there were people had bought a lot of new iron for a lot of years. And so this down period is stretched out long enough now on the grain side so that, and the screws are getting tightened enough. So I'm starting to hear, and the chatter is getting louder about people. It reminds me, farmers now talking about, the way dealers were talking back in 13, 14, 15. Like, we're not going to let this happen again. This was dealers said back then, like, yeah, we got to chase market share, and that's how the game is played, and want to sell a ton of new, but we're not going to get in the same position of all this excess used equipment. Now, when the money starts flowing, that, that's when your mindset is tested. So for farmers now, verbalizing like, $800,000 tractors, combines, does it all pencil to paper? There's mud deals, whatever. We're just pulling back. Okay, now inject some money into it. Corn and beans go way up.
Yeah.
Do you stick with that mindset or not? Now, I just have never heard this level of farmer chatter like, you know what? Maybe we don't need everything that new. My dad didn't roll with three-year-old whatever, and we're farming more ground, whatever. But you swirl that into the whole mix, and that's again, that's why everyday stuff is selling, and we enjoy reporting on what it's bringing, and hopefully can help you make your decisions. And again, we appreciate people shopping at machinerypete.com, trying to find what you need, sell what you need. So it's I guess the one constant is that the ground is going to be farmed.
Right.
And producers need reliable equipment.
Yep.
So through the ups and downs of all these 3.5 decades I've been doing this, whether you're buying new equipment or you need really, really good used to be reliable, no breakdowns, that truth doesn't change.
No, it doesn't. It definitely doesn't. So, all right, Greg, good place to stop. Folks want you to come speak at their next event or come out to their auction and check out the things that are happening there. Easiest way, just go to the contact page at machinerypete.com.
Yeah, give us a call. Love to come out. We got some speaking gigs coming up. A lot of auctions we'll be filming coming up for the TV show end of the year. So we will be at John Kinzenbaugh's big auction November 4th by Sullivan Auctioneers. John isn't selling his whole collection, but he's selling off some amazing tractors from that collection. So we'll be down there in Williamsburg, Iowa. It's an online sale, but we'll be down filming it. So I'm really looking forward to get down to seeing Dan Sullivan and the crew and John Kinzenbaugh. Great people. That'll be fun.
That'll be some interesting stuff come out of that. So for sure.
Yeah, and also I will point out. Notice the date John picked for his sale. November 4th. That's about, again, I said all those years, Machine Repeat, if I'm having my sale, it's about that first week of November on.
Oh
So
yeah,
John and Dan Sullivan, they're smart people.
yeah, they are for sure. Well, Greg, appreciate you being on the podcast. We'll catch you again next week.
Sounds great. Have a good week, Casey.
All right, stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast Markets with Sean Hackett. Sean Hackett's with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the marketplace. Sean, how you doing this morning?
I'm doing really good. We're starting to get into our cooler fall weather here. 60s at night, which is nice. And, we're fortunate to, at least for South Florida, we had a very, very mild, non-existent hurricane season. Unfortunately, we pray for the people's lives in Jamaica right now who are obviously in the throes of something really bad. But at least for us, we had a good go of it. So
yeah, very, very quiet hurricane season as far as landfall goes. Most of the hurricanes stayed out in the middle of the ocean, and it's kind of a non-factor for the most part. But you're right, there's a big one hitting Jamaica right now, and that's Melissa, right? Isn't that what it is?
Yeah, there's 30 inches of rainfall, 100-mile-an-hour winds, and it's very slow moving. They got those mountainous mudslides. It's really, really a sad situation for. It's literally a direct hit, and most of the island got caught on the east side of the storm, which is the worst part, because the part that comes around this way is actually the worst. So I'm not sure what their future holds, but it's going to be a rough go of it. If you remember Bahamas a few years back, where a similar situation happened, and it took a couple of years just to get things back at all normal.
Yep. Yeah, tough time. Thoughts and prayers go out to the folks out there in Jamaica. So we'll keep a close eye on that and see what comes from that, and see how things move forward here in the mainland United States. All right, Sean, let's talk a little bit about Monday. Monday had a big, you saw a big run up in corn. You saw a big run up in soybeans, cotton, everything across the board kind of took a big run up. A lot of this is the trade talks that we're hearing coming out of Asia. President Trump's making deals along the way as he's making his way to Thursday, which is the meeting with Xi Jinping, president of China. I guess, Sean, so as you look at this, the government shutdown has, all the reports and anything like that are coming out of the government right now are at a standstill. So really from a driving the marketplace, it's the anticipation as to what we think these outcomes from this meeting on Thursday might look like. So I guess your reaction we see happen after, Sean.
Well, the headlines say we have a deal, and they mention soybeans only as part of the deal, but you'd have to believe that if we're going to sign a broad trade agreement, that you'd have to believe that cotton and corn and wheat and pork, other markets would have to be part of that overall trade purchasing agreement like we had last time. The question is, how much are they minimally committed to buying? Over what time frame? Is it realistic that they can achieve it? And will they honor it? I mean, is it just going to be a 3 to 6 months for show deal, and then they're going to walk away from it? Or, are they really going to stick to it this time and deliver on all of this? And I don't have an answer to any of that. All we know that it's supposedly a deal is done. Soybeans are definitely somehow part of it, which we expected. But more importantly, I think I'd be looking at what other markets are we really looking at. I mean, soybeans have had the initial reaction because the market today trades headlines, but you have to believe they're going to buy a lot of cotton. So those markets that haven't moved a lot, I think could move more on details on Thursday or Friday if they come out. So we just need to be on the lookout. My general sense is that we're getting kind of a short covering rally. They buy the rumor. And ultimately, I think it's going to be kind of a buy the rumor, sell the news kind of a thing, meaning I'm not sure that the details are going to maybe be as exciting as maybe the market might be thinking. And so we're thinking there's a cash selling opportunity here for producers heading into the end of the week, maybe carrying over into early November. that there's some initial excitement over the details, but we don't think that the Chinese have any interest in buying our stuff in the long run. I think they have every interest in only buying our stuff when they feel it's in their best interest to do so, which it might be now for a little while, or if they just really need to, or our supplies are just the most economic. But I don't think this is a long-term shift. And then, being a steady buyer again, I think this is a truce, a temporary period where they're going to buy a little stuff from us, buy time, kick the can down the road. But I don't think they have any intention of really changing their overall strategy of moving away from buying from the U.S. as much as they possibly can. Hence why I think I would be looking at cash selling this rally into the end of the week, into early November, and getting some of the fresh supplies that have just been harvested, booked at some of the higher prices we've seen in a while.
Yeah, the last time the China trade deal came through, the first term of President Trump, it's exactly what you saw. They came and bought when they needed to buy, and when they had exhausted the Brazilian and Argentine soybean meal and soybeans themselves, they came to the U.S. and bought stuff, and that's just what they do. That's not anything different than they've done in the last 50 years. So it's the same playbook they've used forever.
Yeah, I do think, obviously to put a good foot forward, they're going to come in probably with a little bit of a blaze of glory in the beginning, show good faith. I don't think they're going to run the grain markets up on their own. I think, they'll buy and then step back, and then they'll buy and then they'll step back. I don't think they're just going to come in and run the soybean market up $2 or $3. I don't think that's what's going to happen here. Hence why I think I'd be very careful in projecting too much upside here. Oh, don't get me wrong. It's positive news. Any demand from them is better than zero. It certainly puts the low in. But when you're looking at the 1 year, 3 year, 5 year moving averages, we're all kind of finding ourselves in this upper 10 to mid $11 range. I'm not sure we're going to take out those moving averages on a China trade deal. If we're going to take out those averages, I think something else has to come to the forefront. Weather related or energy, alternative energy policy related, in order to get those prices higher than that. Monetary related, I don't think a trade deal can get us past those moving averages in either corn, soybeans, or wheat. I think those are your max upsides on a garden variety short covering rally on some good news. And that's why I think, I'd be looking to cash sell into this rally. And that's what we suggested to our customers yesterday in our report.
Yeah. Okay. All right. So let's hit this a little bit here. So I've been watching the Malaysian palm oil thing for a while. Basically the last couple of weeks here, it's been very on shaky ground. If you look what's going on there, as you look at that whole edible oils marketplace, Sean, what are some of the things you see happening that's driving that marketplace?
Well, every country has their own internal renewable diesel energy policy, including Malaysia. And how much are they going to do and how much are they not going to do? And then there's the environmental impact of, growing palm oil from the palm oil trees. It's I'm not an expert on palm oil tree agronomy, other than to say that apparently it's pretty economically taxing on the environment from what they have to do in order to produce it. So there's a big pushback in limiting additional acreage. So, and then of course the world is starting like sugar, right? The world is starting to understand that edible oils are really, really bad for you, generally speaking.
Right.
They're really, really bad for you, like really not good for you.
Right.
At all. So, maybe, it's like sugar,
Yeah.
It's pretty obvious. If, drink a lot of sugar, eat a lot of sugar, it's really, really bad for you, and so I just think that means that the human consumption side of edible oils is in a long-term pullback, and we're going to, and essentially you're going to have to continue to utilize more of it for energy production, which I think is given what I just said, I think there's nothing wrong with what I just said. I think if we're going to crush soybeans and we're going to crush palm or, palm oil, and we're going to crush canola, and we're going to make all this edible oils, and it's not good for humans to consume most of it, then we might as well make energy out of it. Why not? So that's where all this is going. And obviously the governments are in the process of trying to figure out how to plumb the market towards that idea. Every country wants to support domestic economy, and if you can keep the production at home in Malaysia and here, it helps the local economy better than not. And so I think that's kind of where we're heading with all of that. And we'll see what happens next year when the renewable diesel standards rise. There's still a lot of debate on exactly the rules. And obviously, if crude oil keeps falling, it makes the economics more challenging. If you're in the 50s versus in the 80s, but that's where we're at with all of that. So I think vegetable oils are probably a market that will stay well bid on corrections due to the energy demand side of the equation. But I think they're going to struggle taking overhead resistance out because the human consumption side is in a long-term trend change for the foreseeable future, the way I'm looking at it. So,
all right. So we got fall's coming in. We're heading into November now. Almost a week away from November. Starting to feel a lot cooler weather come in. My neck of the woods, we get 60-degree days now, not nights. So we have to work our way through that, and we see some colder time frames. When the alien mothership 3I Atlas makes it to Earth, Sean, are we going to see a colder November into December as we watch this cold air start moving its way in?
Well, we sent an update on weather yesterday and went over a whole bunch of different things that continue to give us confidence that we're at least looking at a top 10 cold winter again. We define winter as December, January, February. If you get cold weather before or after, that is an extended season either way. But we still think minimally a top 10 cold winter like last year with more snow in the center east of the country. We think there's a very good chance it could be a top 5 if the North Pacific and the North Atlantic follow the sea surface temperature analogs from late 2013, which so far we're abiding by them almost perfectly. And the other difference is that we have a very high Siberian snowpack this year relative to last year. And historically, when you get a large Siberian snowpack, it does tend to add additional abilities to weaken the polar vortex on top of a negative quasi-biennial oscillation. So all these things suggest that as we approach December, we should start to see this more persistent cold center east pattern develop. And obviously, whether it's a top 5 or a top 10 will come down to what I've mentioned with the sea surface temperatures in North Pacific and North Atlantic. And we'll have another update as we get closer to the end of November to kind of sway which way we think we're going to go. But either way, it still looks like a top 10. And that means that demand for natural gas, especially with record LNG exports and with record demand coming in for building out the power grid for the AI data centers here domestically, are going to keep pressure on the prices to go higher. Once that cold pattern sets in, looks to me like we should be looking for that to really develop in later on in November. That's when it looks like I think we're going to really see the first what I call legitimate cold air really kick in here.
Okay. All right. This week, Wednesday, we had the FMOC, the Federal Reserve, got together and decided that they're going to drop rates. They've talked about dropping rates. We'll see what happens when they get there. Jerome Powell made it very clear in several meetings and several speeches that he gave leading up to this time frame that they were going to drop rates by a quarter point. Sean, as you look at this, still keep stuff pretty high where we're at right now. We still see some inflationary issues out there in the economy. Yes, Sean, as you're looking at this, what are your thoughts on how you think that's going to drive markets?
I think the more important thing is, I think in a speech from a few weeks back that he mentioned that they are ready to stop quantitative tightening. So there's two things. There's the interest rates and then there's the money supply. The interest rates determine the cost of money. The money supply determines if it's contracting or it's expanding. And they've been contracting the money supply by, essentially reducing their balance sheet. And because the U.S. government, I think, has to roll 15 to 20 trillion over the next 18 months, and we've been doing it on the short end of the curve. Obviously, the government does not want to refund at a high interest rate. They prefer to roll at a lower interest rate. Hence the reason why I think they've come to see the wisdom in lowering short-term rates. But on top of it, if you're going to roll 15 to 20 trillion dollars, you need liquidity. who buys all that? Well, it's the banks buy it. It's the funds buy it, right? You need to generate sufficient liquidity to sop up $20 trillion of debt that's got to be rolled over. And then, of course, you're issuing new debt on top of it, right? Because we keep growing our debt. He indicated strongly that they believe they were going to stop quantitative tightening and start reinstilling quantitative easing. And that's what I'd be looking for in this week's, on Wednesday in the afternoon, when he has his press release and he talks about, when he makes this statement. The interest rates are one thing, but I'd really be paying attention to whether they're following through on that quantitative tightening end and quantitative easing beginning. Because if they're going to start quantitative easing again, then that is a significant positive inflationary force for commodities. How always has been, always will be. And that could be something that kind of engages the inflationary tailwind of commodities when quantitative easing kicks in. So I think that's what I'd be looking for, not necessarily the interest rate itself, but the quantitative tightening to quantitative easing transition is I think more important to how commodities might trade. One other thing, Casey, regarding trade, Lula and Trump also had a little meeting, and they both claim that they're going to cut a trade deal here within the next days or weeks and lower those 50% tariffs on imported products. One of those products being beef. And we've seen, I think, 3 or 4 limit down days in cattle market in the last 2 weeks. Yesterday, the feeder cattle market was down, I think, over 13 on expanded limits in one day. So some big changes going on that are one of our first bullish pillars might finally be coming off. And we could be seeing our first big knockdown. And we talked about this, that this might be the first leg down in the cattle market.
Yeah, we saw some move downs on Monday too that were 3-month lows. So yeah, you're seeing some definite movement there in the marketplace. All right, Sean, last thing is you look out towards with the government being shut down and where we're at, and I'm going to throw out some hypotheticals to you here and kind of get your feedback on what this might look like. Obviously, government open tomorrow. I mean, we're a January report, right? We got, even if it opened up by Thanksgiving, we're not going to get any kind of a supply and demand, like a WASI style report, anything like that until January. Right now is the way things are kind of shaping up, just because of how the government moves. So if you're looking at that situation now, Xi Jinping and Trump, hit a deal, and there's some hard numbers they have to hit in there. Looking at that, combining with the January report where things are at right now, if you were to talk with your customers right now, what would you be saying? Hey, be ready to look for these signals to start either buying or selling your crops as we look forward to that market
look
season.
for each of these catalysts for a selling opportunity. So the first catalyst was a meeting with, a trade deal with China. We're getting that rally. The next would be, what if the Supreme Court rules that some of the tariffs or all the tariffs are illegal? My goodness, you get a big rally in commodities. That could be another catalyst. When we finally get USDA data, which I'm expecting in January, and let's say that they, especially on corn, lower the corn yield significantly, and we get and that stimulates a rally, or they incorporate bigger demand in that report because of a China trade deal and not ending stocks down markedly, there could be a significant rally there. What I'm saying is, we can't know exactly how all these different pieces are going to play out in terms of how much the market will rally, but I think you have to be opportunistic to take advantage of when those upside volatility windows are open and get some of your crop that you've just harvested sold. Because I don't see a lot of weather-related risk going into the end of the year in Brazil. I think weather's going to look pretty good. And I think that, if we're going to be looking for a weather-related move from South America, it's going to be the second half of the growing season. So you're going to have to use the headlines to your advantage and move some of your crop. I mean, better to move it now when the market's on rattling than trying to do it in August and September when we're flat on our back. And I laid out targets in my report yesterday, the 1 year, 3 year, 5 year moving average and linear regression resistance lines. These are just kind of statistics of how the markets have traded over the last decade, and it lays out general levels that the market should be. These should be levels that the market should have a hard time going through. And that's all you can do right now is make sure you get enough of your crop that you've just harvested, sold, assuming you didn't panic sell in August, September, get enough on the books at a level that makes more sense, and then store an X amount and take a shot at a more adverse weather scenario in South America in the first half of next year. And of course, our summer. I mean, that's really what I think you have to do. Right now, we have upside catalyst number one. We may or may not get upside catalyst number two with the Supreme Court, and we may or may not get the catalyst in January, depending on when the government reopens. But I just think that's what I'm looking at. You have to be ready to take action, because I just think right now, until we have a much better understanding of the overall intentions of the Federal Reserve, of China, and of exactly, what kind of weather prospects we might be looking at for next year's growing season, I think you don't want to be sitting on too much old crop grain, going into the spring. I would be very, 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 very shy on trying to sell too much of next year's expected production. I think that's, if you're going to gamble, if you're going to speculate as a farmer, I'd speculate on next year's crop supplies and not doing too much sales there. I think right now, given the finances, given the hardship, given the situation with our government, with the inability to get anything done, who knows when payments and support and all these things and tariffs and trade deals, I just think you have to take it upon yourself to make sure you are well funded and can get through this rough patch until things clear up. That's how I'm seeing it, and I think you can't screw around right now. We haven't had a whole lot of exciting things on grains since the first quarter of this year, and we potentially are getting our first moment of excitement. Please take advantage of it and get some cash sales on the books. That's what we're suggesting.
All right, Sean, good place to stop. Folks want to reach out to you and get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, HACKETT, advisors.com. Have a Twitter page at Ferretix11. Once in a while, we put stuff on there that talks about what we do, our outlooks, our cycles, our statistics, our correlations, to see if what we do might be of value to those that watch your fantastic, far-reaching show.
Well, that's pretty good nomination there, Sean. Appreciate that. Sean, appreciate you being on the podcast, man. We'll catch you again next time.
Sounds good, Casey. Thanks.
Thanks a lot. Stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. I got Andy Caygeon Junkin here on. If you've listened to the podcast before, Andy's no stranger to the podcast. He's been on here a few times talking about the stuff he's working on and the people he's working with. But I always like when guests come back on, Andy, I want to make sure everyone that's new to the show understands who you are and what you're doing. So give a little background on yourself and what you're doing.
My name is Andy Caygeon Junkin. I'm a seventh generation farm boy from a little town called Bob Caygeon, Ontario. I now live in eastern Iowa. I have a company called Stubborn.Farm. I help stubborn farmers work better together. And we'll get into what I do later on in the show. But I help farms in 22 states and 5 Canadian provinces. I've helped over 800 farms. And we're starting to do a little bit down in South Africa and abroad as well. So, yeah.
Okay.
Basically, my niche is I help stubborn farmers work better together.
Okay. So give a brief background how you ended up doing this from being a seventh generation farmer.
Essentially, my dad and I tried to farm together, and what was kind of a little different is that the day I left for college, my mom, she showed me the farm financials and said, we have to change. You have to go to college. You have to learn new ideas, and you have to bring those ideas home, or else we're going to lose everything. And you got 5 years to fix this mess, or else I'm leaving your father. And so change was not an option. And unfortunately, the way we discussed change was not functional. It was, and my dad was stubborn, and then I got to be really stubborn. And my dad, for many years, I claimed, well, it was true. My dad was arrogant. My dad was narcissistic. My dad was entitled. He just thought that we did not need to change, that the world around us would change, that he would be vindicated. He blamed everybody but himself. And for many years after, I blamed my dad for these problems. But then over the years, I've come to realize I was equally narcissistic. I was equally entitled. I was equally arrogant. And essentially over the last, I've been doing this since 2007, full-time since 2010. And I've helped over 800 farms in 22 states and 5 Canadian provinces. And I started off as a mediator, and my life goal now is to get rid of the need for a mediator altogether. The last 5 years, I've really had a real come to Jesus. I've written 7 books, but the book we'll be talking about today, I actually released it 2 years ago with you, Casey. That day I was having a baby, and so we published the book. Decided to have a podcast with you again 2 weeks before I'm supposed to have a baby this time. Mm-hmm. So anyway, so that's where we're at. So yeah. I think that the biggest thing that's changed with me in the last 5 years, and why I'm so hell-bent to get rid of the need for a mediator altogether, is the fact that for many years, I tried to study psychology and marriage counseling, and tried to apply that to family farms and getting the farm families from button heads and pulling the farm in different directions, get everybody on the same page and pull in the same direction. And I was constantly frustrated by farm families being stubborn with each other. And it was I got the reputation for being the best mediator. I was the guy that lawyers and accountants would call out in different states when they had a really rough family that they had 2-3 mediators already out there, and I was a Hail Mary. And I had a track record of turning those situations around, but getting deals signed. But the question was, is this family going to get together for Christmas in 2 years' time? And more importantly, is this family still going to be farming together as partners 20 years down the road? And for me, that was a question I asked myself, was the measurement not on how many deals I got signed and the success rate there, but the question is are these families going to be still getting together for Christmas? In a lot of cases, they weren't. And that really bothered me. And I got to studying marriage counseling a little bit deeper. After studying it for 15 years, I came to the final conclusion that the psychologist, I didn't realize this. For 15 years, I studied what they were doing. And then I came to realize that they don't know what the hell they're doing, because basically the probability of a marriage counselor actually improving a relationship is only about 20%. And that's why we have 50% divorce rate in our society. And, the truth is, like, I had a higher track record than a 20% success rate. But, for me, is the family going to still get along 20 years down the road? And the truth was, in a lot of cases, they were going to be splitting ways, and we just got deals papered so that they could do that. And to me, that wasn't acceptable. And it just blew me away that I had been studying psychology and marriage counselor, and they have a 20% failure rate, 20% success rate, and only 80% failure rate. And that just completely blew me away. And then I realized that the root issue is that everybody's pointing fingers at each other, and nobody's looking at 3 fingers pointing back at themselves. And I think that the key is for farm families to get along, is that we've got to stop being stubborn with each other, and everybody's got to be more stubborn with themselves to turn bad habits into good habits, so that they become the partner friend anybody would want to work with. And so my obsession over the last 5 years has been to really develop a program that turns conflict, like a lot of farm families, they avoid conflict at all cost, and issues don't get solved, problems don't get addressed. There's a lot of resentment, as well as money slipping between the cracks because half the decisions that should be getting made are not getting addressed. And there's not a lot of lost profitability because of that, because the decision to not make a decision is a decision itself. And a lot of farmers are losing half their potential profit because of that. But more importantly, the resentment that builds between partners that leads to huge family fights. I mean, 77% of family farms do not have a succession plan. It's not because they haven't had a succession planner out to the farm. It means that 77% of the time, the succession planner leaves because the family's too damn stubborn to sit down and be able to make a decision. And that's because they suck at conflict. And the issue is we've got to turn conflict from a weakness within a family into a strength. I don't care who you are. We all have bad habits. Like with my dad and myself, I'd bring up an idea and he'd get defensive and take it as a personal criticism. And if I said black, he got to the point he'd say white. Well, the root issue was that we got in, and I was the same way. We both have that trait that we talked over top of each other. When the other guy was talking, we were thinking about what our response was instead of actually trying to understand what they were saying. So a simple habit change, like getting a person to actually not put a thought in their head and actually listen to what the partner's saying and pause for 10 seconds, is a simple little habit change. But, you know, we all are guilty of a few bad habits when it comes to conflict. And as a result, we have these family fights that are unsolvable.
Yep. All right. So here you laid out pretty well kind of what the background looks like and what that is. So how'd you come up with the idea to do this? And then what have you developed to help kind of work through this?
Well, I think just before COVID came realization that, you know, the idea of sitting the family down there by pointing fingers at each other was going nowhere productive. And so the idea of developing habit changes really became an obsession of mine. Where things, I work with a family friend back home, and he had some kids coming into the operation. He's a very smart guy, and his wife is extremely smart as well. And they mean really well. They got a couple kids. I'm not going to say much more, but so folks don't guess who they are. But they've got a couple kids that are really keen, really driven. The problem is that I was trying to explain to my friend what he was not understanding about his working partnership with his kids. And sometimes he'd be defensive, just like I spoke to you about, as far as talking, but not listening to what his kids actually had to say. His wife really had struggled with transitioning from a parent-child relationship to a partnership relationship. For her to be held accountable, for instance, sometimes she was late doing the books. For her to be held accountable by her kids, that was hard for her to wrap her mindset. She seen that as being disrespectful.
Oh yeah.
And so there's a couple habits like that I was trying to get across them, that they weren't getting it. And my wife says, well, you can never tell him what to do. He's got his own mind. And at the same time, I was working with mules later that day, and I realized you can never, the difference between working with horses and mules is that you can never tell a mule what to do. It has to be his idea. And I think it's the same thing with farmers. And so what I've done since that point is I put together 900 podcasts. And I've sat down, I've recorded 900 10-minute podcasts that cover different aspects of conflict related to how we make team decisions together, how we deal with conflict itself, and how do we say what we're going to do and then follow through and say follow through on having the grit to implement things. And so those are the aspects I have these podcasts on. And basically what I do is I send podcasts to a farmer every day over 6 days a week. And he just sends me a text back as to what podcasts really hit home. So, and then I basically sit down, we have a further discussion about one of those podcasts that really hit home with him. And then I ask him some questions that make him think differently. And then we talk about what he wants to change. So it might be a simple thing like listening and pausing for 10 seconds and instead of before you consider another thought or try to counter argument. Simple little habit change like that. If you make 12, and I do that over 12 weeks. And so if you have a farmer, he makes a resolution, one resolution a week based on what, not somebody pushing an idea on him, but it's his own idea. We're getting serious habit changes. And what we do is do that once a week over 12 weeks. You get one partner making 12 habit changes, just little micro habit changes. It's a huge difference to how the family is able to sit down and have a family business meeting in 12 weeks. And sitting down and do succession planning is easy after that.
Okay. That's pretty cool. Okay, so you have those 900 podcasts, you're sending those out, 10 minutes at a whack. Do you have a good example of a real life scenario where you've implemented those two things and had success?
Yeah, I'll give you an example. Just I was dealing with earlier today is I had a German Baptist family down in Arkansas, and they had actually grown the operation significantly. They had grown it to a $40 million company. It was an agriculture business, but it wasn't primary agriculture. It was I don't want to get into it so folks don't guess who they are. Mm-hmm. But basically the sister was the bookkeeper, and she was of plainclothes background, but she was also, they grew to be a $40 million business because she did a really good job. The problem was that she tried to do everything herself and she got burned out. And so her brother basically hired 3 people to replace her, and she felt pushed out. And she just basically, her husband contacted me, and he was in that dynamic. There was 2 very driven. His wife was a very driven person. His brother-in-law was extremely driven, and he was kind of the supportive individual. And the ironic thing was that they were plainclothes people, but their root issue was that they got it when they had a family meeting. Arrogance was the key factor that was dividing this family, because they were all talking over top of each other. Sarah was not, when she showed up to a family meeting, she'd sit up there at the table and she'd only criticize. She wouldn't really contribute to any ideas in a constructive manner. She was just constantly cynical because she felt so hurt because she had been pushed out of the company. She was an owner, but she felt disrespected. And from her husband, as far as her relationship with her husband, she felt that her husband had been loyal to her brother, and had sided in a couple arguments with her brother and her nephew, and she felt that essentially she had been cheated on. Right, it was the same as if she felt pushed out of the company. If she felt completely violated, and the thing is that the root issue with this family is the arrogance was ripping them apart. And so what we did with that family is we got them to recognize.
All right, and so you sent me a picture of a mirror. I'm gonna show what it is, but there's a note on the mirror, and while I'm pulling this up, talk me through what's that all about, and why is that a significant?
Well, just after I've been working with a guy for a couple of weeks, about 8 weeks, we put together all these different resolutions that they have, and essentially this is a pretty good example of a resolution. So this is a partnership where there was three siblings in their 60s. Their dad still had all the equity before in his name before I started working with his family. But basically, there's 2 brothers that didn't speak to each other, and I got them to the point that they're all talking to each other every night on a phone call, and they have when I got in touch with this family, basically there's a nephew, our niece that had just gotten married that week, and on our honeymoon, they contacted me because the nephew had been working there for 6 months, and he wanted to farm. He's very interested in farming. He comes from an agriculture background and is in the agriculture business, but he's been working on this farm, but he didn't know how to get involved as an owner. And so we've been working with them, and essentially, what happened was that we doubled their production. They were an organic operation for pasture-based dairy, and they've gone from 47 pounds to 74 pounds in milk because we got them problem solving together. But I think the more fundamental point that I want to get across is that one of the partners, this is what he has in the corner of his mirror. And basically what it does is combine a couple ideas of where he was at fault. Like he's tended, when he got into conversation, he talked over his partners. For him to say, I'm going to be, from this point forward, be curious, not defensive. That's a major mindset shift for him, right? But this is what he tells himself every morning when just 2 minutes after he uses the toilet, before he leaves the bathroom, first thing that he gets up at 3:00 every morning. He says these different ideas are combined into a creed. And it's basically, he says, be curious, not defensive. Solve the root problems by brainstorming options. Anything that could cause resentment, we deal with as quickly as possible. Be empathetic and understanding to create a successful partnership and happy life. And for him, those are the key points that he learned by working with me over eight weeks. Is those are the like before, they always got into, instead of solving problems, they always got into blaming each other, and they identify the problem, but they'd never ever problem solve it.
Right.
By me getting them, for this partner to say, from this point forward, I'm always going to solve root problems by brainstorming options with my partners. He had a tendency to jump to conclusions and just kind of force and bully his way, as a lot of farm families do. By him saying, okay, for every time that we see a problem, like for instance, they got into a situation where there was a problem with their feed. They said, well, we're not getting the production because we've got an issue with the feed. What are the 3 things that are holding us back as far as potential, the most likely problems that are causing this feed issue? And then from that, what are the three issues within that? And so by them breaking apart these problems and over 2-week cycles, for instance, with his partners, making sure to brainstorm options and then be able to talk with the pros and cons, and then actually within 2 weeks make a decision on what they're going to do to change, has doubled the production. I mean, they've gone from 47 to 74 pounds of milk. And, that's a low producing herd, but those principles, for highly successful farms that are dairy I work with a lot of dairy operations. Even if you have 95 pounds of milk, you're one of the highest producers in the county. A lot of farms, by using that methodology of getting them to identify what are the habits that are holding them back in conversations from constructively problem solving, by fixing those problems, by having each of the partners making one habit change a week over 12 weeks. And then at the 8-week mark, we kind of summarize what we learned so far, putting into the corner of a mirror, and then for that month after, making sure those habits stick. It's a game changer when we sit down with the family and then start having family business meetings on a weekly basis with all the partners. You can turn around in 180 days. You can turn around a farm 180 degrees, just like that operation. Whether you're a high producer herd, and it's a lot of high producer herds say there's no way that you can get more profitability out of us because we're getting awards by the county. For those farms, I'm generally dropping their cost production by $2 a hundredweight. It's unbelievable. But the thing is, anything you can do to improve the quality of decision making within the family, that's going to skyrocket the profitability, and more importantly, get rid of any resentment that you have within the partnership. And farming with family is fun again.
Yeah. So you brought something up when you were talking about this story here, and I think it's something that we should visit. When you're looking at generationally how things are now, right? So you have previous generation, you go back 2 generations ago, there was a hard stop when you quit farming, right? And that was 50, 55, 60, something like that years old.
Yeah.
And the reason for that was your body broke down. Next generation came in to the fact because they had to, right?
Yeah.
And they were doing that. Now you see because of medical advancements and those kind of things, you're seeing guys that are farming well into their 80s, right? And,
Yeah.
and you're seeing all those kind of things that happen, which kind of gives that whole Prince Charles effect, right? You got a 75-year-old, 70-year-old that finally gets their shot at the farm.
Yeah.
Meanwhile, you got next generation coming in. That's 20, 30, 40-year-olds that are working their way into the farm. In your experience working with these groups that you've worked with, do you see an added layer of conflict because now I'm 70 years old, I get the shot to run the farm, and I don't know that I really want to do it anymore, and I'm ready to pass that on? Do you feel like there's an added level of conflict in there because of the situation of generational transfer?
What we have a problem with is that we have the king of the hill syndrome, as I like to call it, where we're fighting over who's the boss, right?
Mm-hmm.
And the truth is that, well, let's just use it now. I don't know if we spoke about this before. I think we spoke about this briefly before in our last podcast, but I think it's a really important point. You're right about that. 100 years ago, we had the principle in marriages that there was one person that was dominant, and I mean, it was the male figure that called the shots, and the wives were to be subservient. Well, what's happened in the last 100 years is that, I mean, nobody wants to be treated as an underling or a slave.
Right.
Right. And,
Yep.
And as a result, we've had this problem that in theory, within a lot of marriages, we're supposed to be an equal partnership. But the truth is there's still that power struggle and dynamic that's causing over 50% divorce rate. And I mean, this question about who's the boss is causing a lot of verbal and emotional abuse in marriages. Sometimes it gets physical. And in farming partnerships, it's the same thing. I mean, no 40-year-old wants for his 70-year-old dad dictating to him every day what to do. But too often that's the case, right? And nobody wants to be somebody. And in a lot of cases, father passes away, and suddenly one of the brothers thinks that he's going to be the boss, and there's two other brothers, and suddenly within 5 years they feel like they're that guy's slave, and that causes the farming partnership to fall apart. And it's all because they struggle in making decisions, because there's this belief of one person has to be the boss, and really it comes down to an issue of arrogance, right? And we get into bickering because, and it leads to a lot of verbal and emotional abuse, and sometimes it gets physical. And I think that the issue is narcissism within a lot of farm families. And that was a reoccurring theme I seen when I was mediating so many farms, was that there was always one partner, if not several, that were narcissists. And those of you that don't know what a narcissist is, it's basically the psychologists, they treat it as a personality disorder. And so when COVID happened, I actually got it studying 47 books of narcissism. And all those books, of the 47, they all came up with the same answer. You got to let the person know what they're doing wrong. If they don't get it, divorce them. And I just couldn't accept that, because I myself, with my dad, that was the solution I took, was I was told by 3 psychologists, if you can't change your dad, you got to get divorced from him. And I took their advice, and I moved to America from Canada, and just, but the thing is that narcissism, when I studied it, I thought it was a hopeless cause, because all these psychologists says you can't fix it. But the truth is that for those of you who don't know what narcissism is, just let me define it first of all. It's having a me first mentality, wanting to be recognized, but then putting down the contributions of everybody else around you. having a complete lack of empathy, not being concerned about anybody else's needs, just seeing things from your own angle, having an exaggerated sense of achievement and importance, being exploitive in behavior, having an entitled attitude, being jealous and envious, always using manipulative tactics, blame shifting, never taking responsibility for a problem, always shifting blame on somebody else, and being completely defensive. Now, within most families that I work with, they're good people, but when we get into moments like succession planning, we can all have a little bit of these traits on a good day, but when we get into tense situations, it really turns up the volume as far as these narcissistic traits in all of us. And I don't care who you are, you know, a lot of psychologists, they'll diagnose somebody as having, 8 of those 10 traits and then diagnosing them as being narcissistic. I think that in our worst moments when things are tense, we can all be sometimes manipulative or sometimes blame shifting. And what I came to realize is that, truthfully, to have a family business environment that's extremely functional is being the opposite of those 10 traits. And that's when I came to realize, when I start working with families, the first thing I do is say, we can no longer be arrogant with each other, and we can no longer be narcissistic or entitled. And when I talk about being entitlement, I mean, quite often we talk about the next generation not wanting to show up to work on time or put in the effort that the previous generations did, or thinking that they deserve more of the pie than they've earned. There's also the entitled generation there's a lot of men that are 75 that feel that their daughter, they've built an empire and they can treat their daughter-in-law terribly. That's an entitled mindset as well. And I think the answer to all this is to just come to the absolute truth as a family that narcissism is the enemy. And in order for us to farm successfully, like you said, Casey, you generally have 2-3 generations farming together, 2-3 siblings farming together, because, I mean, it used to be you split up the equity among siblings and they go buy 100 acres and a mule. Well, you can't do that and have the economies of scale that's necessary to be able to buy the scale of equipment that you need to have economies of scale. You got to keep it all together. And so you've got an environment where the solution is, instead of calling each other narcissistic, you just got to recognize that narcissism is the evil of our family. And we've got to stop being arrogant with each other. And we've got to be the opposite of narcissistic. And, there was a period of time that I came up with this statement, and I'll read it to you, Casey, that I used to get guys to put over the toilet because they need to read it 5 times a day. It says, instead of being, we got to be humble and empathetic, always consider everybody else's needs and feelings, not just your own. We got to take responsibility, always focus on problem solving root issues without blaming blame or playing defense. And I should say at the top of here, it says that this is our family's culture statement. Together we thrive, divided we fail. In order to succeed, we have to shift from a me to we mindset. We will achieve this by adopting these 5 principles. I'm listing off the principles right now. Never feel entitled to more than you've earned. We've got to work hard to earn everybody's respect daily. Treat everybody with kindness, respect boundaries, and never take advantage of anybody. And then never need praise or be envious. Always be grateful and daily appreciate everybody else's contributions. That's the narcissistic traits that I've been doing for 5 years. Then there was a day that I was actually at a wedding, and I came to realize that when a man stands before God, family, and community and makes a promise to get married, he's making a statement to the community without knowing it. I mean, we just think about the big party after. We don't really think about what the marriage ceremony is all about. But he's saying, I'm going to be the opposite of narcissistic. I'm going to put this person's needs first. I'm going to be the opposite of entitled. And whenever we get into making decisions together, I'm never going to be arrogant. I'm going to be humble, and we're going to work this out together. And quite often at weddings, they say the 1 Corinthians 13 I'll read it to you. And for me, I think this really defines a higher standard for not only marriages, but also farming partnerships. And this standard that's going back 2,000 plus years to the days of Jesus. I don't care if you're a religious person or not. These are common sense principles that any farm family can identify as being the opposite traits of a narcissist, that we all have to rise to a higher standard. And the 1 Corinthians 13 says this, and you probably heard it at every wedding. It's pretty much read. It says, love is patient, love is kind. Love does not envy, does not boast, is not proud. It does not dishonor others. It is not self-seeking. It is not easily angered. It keeps no records of wrongs. Love does not delight in evil, but rejoices in the truth. Always protects, always trusts, always hopes, always perseveres. Love never fails. And I believe that there's a lot of good Christian farm families that you'd be surprised what they do behind the barn with their partners, the people that they love the most. And the problem we have, Casey, is that none of these families mean harm. Like, too often, we are cruel to our partners without knowing it. When we get into conflict, we try to be kind, but we have bad habits that we just don't know. Like, for instance, this family that you just showed me on the mirror, he didn't realize he was being defensive when he walked into conversations. For him to learn the habit of being curious and to tell himself when things get really tense with his brother, am I being curious or am I being defensive? For him to ask that question just changed the results of that operation. And what I say to all farm families when I work with them is that let's set the standard from this point forward. Yeah, we have had conflict in the past. There's spilt milk. There's nothing we can do about it. We got to obsess about what's in our control. And we got to stop pointing blame in our partners and be obsessed with what we can control. Am I asking ourselves the hard questions of adapting new habits? Like, am I being curious in this conversation or am I being defensive? And as a result of that family, that 2 years ago, the two brothers never talked to each other. They're now looking at, they had an hour conversation and it was about succession planning, and also they're building a new barn. They would have never been able to do that unless they all made the mindset shift. And all we did was we got three siblings and 3 nieces and nephews. They've all made 12 habit changes to how they do things. And we've made that stick. And you just take an average partnership of 3 partners. If you get 3 partners making 12 habit change a week over 12 weeks, that's 36 changes. And then what I do with the family after is I work with the family for 12 weeks, one-on-one with each individual. And then I work with the family together, and each week we make one improvement as a family as to how you work together. And that's 180 days. And within 180 days, we make a 180-degree turn in how they work together by fixing stubborn from being a weakness of the family into a strength, by getting them to stop pointing fingers at each other and actually looking the 3 fingers back at themselves and the habits they need to become more stubborn at changing to have the partnership they want.
All right, so you've laid out a really good plan here, showed a lot of good examples. The hard part of what you're talking about now is, Andy, you're not there anymore, right? And you step away from the scene, and you've given your wisdom and you've given your advice and given your plan to these guys. How do you, when you step away from that, how do you make sure that they're living those values and working together as a team?
Well, after the first 12 weeks of working with the partners individually, what I do is start off by having, like you said, you showed a picture of the mirror of a creed that they say to themselves. I actually put that on a mirror in hard format and get them to put that by the boot rack that they have probably in the garage, that they actually say that to themselves every day. So, like, for instance, this guy we spoke about, he says to himself, every morning, I'm going to be curious, not defensive. I'm going to solve the root problems by brainstorming options. Anything that could cause resentment, we deal with it as quickly as possible. And we're always going to be empathetic and understanding so that I'm committed to having a successful partnership. And as a result, we'll have a happy life. He says that to himself for 30 seconds every morning at 3:00 in the morning. And honest to God, that becomes part of his subconscious of how he thinks. And it's really changed how he operates because, when you're born in a partnership and a family farm, you learn bad habits. It's really hard to change your mindset, the way you function. But if you can say a creed that's a higher standard to yourself, it's a game changer. And then within that family, they're actually not very religious, but they actually got in the habit of saying 1 Corinthians 13, love is patient and love is kind, like we spoke about before each meal. They go to church Christmas and Easter, but they're not very religious people. But for them to say that before they have each meal with each other, it really helps them question every day, am I being patient? Am I being kind? Am I being easily angered? Am I keeping no records of wrongs? And this is a higher standard that the whole family as a team have adapted. And then what I do when I work with a family, in the second part of my program, we have team family business meetings where I have a weekly meeting. Every week we introduce one new habit and how they can better work together as partners. So like for this guy that I was just speaking to you about, it was a simple, anything that could cause resentment, he had to write on a yellow sticky note. All of them had to have on a yellow sticky note, they had to identify a problem that could cause resentment within 2 weeks from now if they don't get it addressed today. And just simply having that habit, for instance, of writing on a yellow sticky note and they all pulled it out in their meetings, that was just one habit that we adopted that week. We did that over 12 weeks, 12 little habit changes like that, making sure that the issues that have to get addressed in those meetings. It might be, for them, a big game changer was simply having them have a 5-minute phone call and a conference call at 7:00 every night to plan the next day so the right hand knew what the left hand was doing. So what we did was we got them to adapt one habit change a week. And over that 12 weeks, we got them working together as a team. What we did was we got together some foundational principles of how they function as a team. And for this family, I'll show you here. I get it written inside of a wallet so that they actually remember 10 years down the road. So what they have after the end of 6 months is a higher standard that they identify their own weaknesses and they repeat that to themselves in the mirror every morning. And then that changes their identity of who they are. We have a higher standard of 1 Corinthians 13 that they've learned to apply as a family together. And they accept zero tolerance for narcissism. And they're all striving to be the partner and friend anybody would want to have. And then we reinforce that by having some simple principles. Like inside this wallet that I'm showing to you, for those of you that aren't listening, this family, this is a wallet from a family. This is another family. It says, I must earn trust and respect daily. Nobody is smarter to make all decisions together. Well, for that guy, that family that we have this wallet for, the father went off. He asked his 2 sons what they thought about buying a farm, and they didn't want to buy it for different reasons. They thought there was another farm coming up for sale down the road that they should be putting their money into. Well, the father thought it was a cheap enough deal. He went off and bought it and then expected his sons for the next 30 years to make payments on that farm, right? That's when I got the phone call. But them having a simple rule as a family, from this point forward, we make all decisions together. Nobody's smarter than the other guy. That's a foundational principle. So basically, I get 5 simple principles of how we're going to make decisions going forward. And then with this family, what we did was we got them to identify a common purpose. And for them, it was consistently having consistently milking at 100 pounds of milk, energy corrected milk for $15.75 a hundredweight, and everybody goes home happy. And at that point, when we wrote up this mission statement and put it on a wallet, they said there's no way in hell that we can produce milk for $15.75 a hundredweight. Our cost production right now is $20. Well, with this family, we dropped their cost production by $2 within a year, and that's because we got the family listening to each other's ideas and brainstorming and problem solving in a whole different fashion. That we were able to, within a year, rapidly change things around. We changed things with the nutritional program, changed things with the breeding program, calf raising. If you get a family, anything you can do to improve the quality of decision making as a family, if you change those dynamics, it's going to have a direct impact on profitability. And more importantly, everybody gets along. And then sitting down and do succession planning, it's a 3-hour conversation instead of World War III. Because everybody's listening to each other.
Yep, for sure.
Yeah.
All right, Andy, you got a lot of good stuff here.
Sure.
If folks want to find this stuff, where do they go find it at?
I think just go to stubborn.farm. I actually have my book. It's gotten, since we last spoke, I released it the day that I was having a baby, and I actually had a podcast with you, Casey.
Mm-hmm. I remember. Yeah.
The thing is that since then it's gotten 5 out of 5 star reviews on Amazon. And I offer, I don't care about making money off a book. If you want to buy a book for your partners at Christmas to put in a stocking, you can buy it off of Amazon. But just if you want to just listen to it this afternoon, it's a 2.75 hour. It's like a podcast. You just go to stubborn.farm, www.stubborn.farm, and you can download my book there. I give it away, the audiobook version, for free. You can just listen to it like you're listening to this podcast, and maybe share it with a family member or neighbor, and hopefully we can change how farming's done.
Yeah. Do you have your podcast list someplace so they can see those podcasts?
No, that's private.
Okay.
Basically, if how I work with folks is I basically, I'll work with a guy for a month and suggest to him that he does not mention to his partners about this idea. Just kick my tires for a month. And what I'll do is I have a really about an hour survey, so I can really drill down to your personality dynamics and your partner's personality dynamics. And then what I'll start doing is send you a podcast every day related to your needs. And I'll do that with you for a month, and we'll have a conversation once a week. You can see how it works. And if you like it, then you can, anybody that's listening to this podcast this afternoon, if they want to listen to these podcasts themselves and get podcasts that are specific to their needs, they just try my free trial, and they can kick the tires for a month. If they don't like it, don't pay me at the end of the month. I always have guaranteed for the last 18 years, 300% return on investment. That's how I built my business. If you don't like it, don't pay for it. And then if you like it, then you might want to introduce it to your partners over the months after. But my general statement is this: is instead of calling me up and saying, I need you to fix my partners, my challenge to you is to demonstrate to your partners that you're willing to make a few habit changes yourself. And if they can see the change in your behavior as a result, they will adapt a different approach to themselves. And in 180 days, you can have a 180-degree turn in your operation.
Good. Well, I really appreciate you coming on the podcast talking about this stuff. This is a great conversation. It's good topical stuff, especially as we're heading towards the end of the year, and especially the end of a very hard year for a lot of folks.
Yeah. Casey, I just want to make a final comment.
Mm-hmm.
You're a fan of Cam. You know Cam Haines at all?
Oh yeah.
So he has this coffee mug that I've had for years. It says, "Nobody cares, work hard."
Mm-hmm.
And I would suggest that every farmer that's listening to this podcast should go to Cam Haines' website. By the way, Cam, you can have me on your podcast anytime. But the thing is that my statement is this. I mean, farmers don't have a hard time working. Many might put too much time in the shop, right? And haven't figured out that work-life balance quite yet. That's not the problem we have, is working hard. The problem is we have a hard time with hard conversations with our families. And we got to get better at that. In order to survive this crisis, there's two things that have to happen. We have to get better at having hard conversations that are productive with our partners by changing our habits. And more importantly, obviously, we got to stop growing shit that nobody needs, right? I mean, we're growing beans for the Chinese, and the Chinese don't want it. So we got to figure out a different business model.
Yep.
And the only way to do that is to work harder. First of all, fixing your skill set as in conflict, and then having some hard conversations over this winter about how we're going to survive this so we don't continue to grow corn and beans for the next 5 years and lose our shirts. How can we pivot so we're growing food that consumers willing to pay for, that we're making $1,000 an acre profit, not putting $1,000 into it and losing our shirts. We're putting $1,000, we're making $1,000, and that's going to take some creativity. But the first step is to change the family dynamics, and still, instead of avoiding conflict, we got to embrace and get really good at problem solving together. And the way we do that is problem solving, how we problem solve itself.
Yep, for sure. I can see your coffee mug already. Nobody cares. Have the hard conversation.
Yeah,
that's your new coffee mug. So, there you go.
There you go.
All right, man.
Okay.
Andy, appreciate you being on. If folks want to reach out to you, the best way just go to the website and there's
just
a
go
contact.
stubborn.farm, get a free audio book. I don't care about making money off of books, and but I do care about family farms still being around 30 years from now. That's why I'm in the business of doing it. And I'd love to help your family if you want.
Yep. I've listened to his book, and it's good. There's a lot of good information in there.
Appreciate that. And the only question I ask anybody listening to this podcast, if you know a neighbor where they're having tough times, just share this podcast with them, and let's save family farms together.
Right on. Well, Andy, appreciate you being on the podcast. We'll catch you again next time.
Yeah, you take care.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Get the latest markets, weather, and rural news whenever it works for you. Farm Journal TV is on Roku, Fire TV, and mobile. Try it for free for 14 days and take ag with you everywhere.
All right, welcome back to Moving Iron Podcast. Got Aaron Fennell back on here to talk about what's happening in the marketplace. Aaron, how you doing?
Hey, everybody. Things are good. Doing well. We're winding down October. In our part of the world, sugar beets are wrapping up.
Yep.
And we're pretty much down to corn.
Yep. Yeah, this is the tail end of harvest here. So, and typically our neck of the woods, this is when corn gets full bore. But with the way the weather's been up throughout this fall,
there are still beans being combined. Still,
yeah. There's
saw 4 circles of beans on Sunday. Like, oh my god! And not from a guy who's always late type of deal, you know?
Yeah.
Like, wow.
Yeah, there's a fair amount of stuff. It's just been kind of a fall, a little odd fall, right? We've had a warm fall, and we need that freeze in there to kind of like put a hard stop on everything to kind of get it to dry down and those kind of things. So we're getting that now, but which is not out of the ordinary, like this typical time. But
hey, to give you a reference, what kind of a weird fall it is. Not sure how Kansas claimed it, but the state flower of Nebraska should be the sunflower.
Oh, I know how come, because Kansas was a state before Nebraska. That's
alphabetical order. One of those deals. I see. Everybody pick a flower. Okay, Alabama, you're first.
Yeah.
All right. So sunflowers, all the ditches full of sunflowers, right? And they were dead and gone, a thing of the past through August. Then we get to September, half of them came back.
Well, yeah,
we started the second crop of wild sunflowers all over hell. That's how wild of a fall it's been. Well, usually we get to that where those started regrowing. Usually it is just scorched earth out here, and it's like, whew, it's hot and it's just god awful dry. And get ready for harvest. This year it's like, oh, it rained again.
Yeah, yeah, we had a wet second half of August and a pretty wet September, and
a wet summer, entire summer in general.
For us, yeah, for sure. It's been It's been a different, a different year for sure. It's just been one of those years where everything seemed to come together at when it needed to come together.
Right.
This is the first year where I don't know that we had. I mean, I can't think of a single hailstorm that came through the area and tore stuff up. Now, south of us, we saw some hail, but in our immediate area right here in the valley, I mean, there wasn't very many hailstorms that came through to the point where I don't
for
know.
sure.
I mean,
that's not necessarily the hail, but with
severe weather in general.
Weather in general.
Yeah.
Talking to guys across the country here in the last couple weeks, it is the constant same report, like 30 to 40 above average or 30 to 40 below. There nobody but yield.
Oh, yield. Okay.
Yield out there as they're harvesting.
Yeah, that's what I'm hearing too. Yep.
Right.
Yeah.
There's no average. It's either best ever or train wreck.
Right. Yep. And that's I'm hearing the same thing.
So apparently you pro farmer guys just went to the good spots.
Well, at least the pro farmer guys were, better than the USDA is, and they're like, we're sticking to our guns on this one, folks. Okay, this is legit best
national
crop
210.
Idiot. Let me start on that. Then they shut the government down, and then it puts everything in. I've kind of had it a little bit with
I can almost hear that turbo spooling up, Casey.
I get so tired of it. It's just the same. Every year, it's the same. It's just the same. Lucky this is a PG show, dude, or I'd be dropping some serious. God bless America. USD wears me out. And every year they do the same thing. Every year.
There's always something involved that the producer has zero control over. Yep. That truly has zero to do with them, but impacts them in a negative way every year. Just cause.
Yeah, and then in January they come out like, what were we supposed to do? What happened? I don't know what happened. It went from 189 to 172. What do you want me to do? I don't know. God, fucking.
You're supposed to divide the kernel count, not multiply it.
It's just so frustrating, dude. It absolutely frustrates me. Oh man.
Anyway,
a whole another topic that we could go way down a rabbit hole on those guys.
Fill back in on that one.
Yeah. All right. So probably a good transitionary period here. So so we got a lot of things happening right now. So we've got obviously where we're at with crops. We need to have a supply and demand report come out. We need to have ending stocks report, those kind of things come out, which we won't get till January because the government shut down. Just ironically enough, shut down. So we're trading on the market right now on a couple of different things. One, obviously weather we see happening. We've seen stuff down in Brazil, what that crop progress looks like down there. And the biggest thing is this Thursday,
Donnie's in China.
Donnie goes to China and see what heck comes out of that. So they said
they have a deal.
Huge. they have a deal put together, and they're going to finalize everything. Soybeans obviously is on the table, but I mean, everything else. I had Sean Hackett on.
Are they going to trade China any Argentine beef?
I don't think that's going to be on the table. They do like an end around with that. I don't think that's going to work out well for anybody. But they had. If you look how things are going right now, crop prices right now. If you look at where corn's at today, this specific morning, which is Tuesday morning at 7:00 in the morning here Mountain Time, corn's trading at 431.5. Which, if you go back and look over the last 2 weeks, that's about 15 to 20 cents worth of movement in the marketplace. I'm a big believer that every quarter you see movement in the marketplace one way or the other. Quarter up, quarter down, you see things move. Either things start moving and things start shaking. Now, this is a little bit different time frame than what we've seen in the past, just because of where the pain that's been laid up to this point. But if you're watching things move along going into this harvest and you have to sell at the combine, you have some decent prices to sell into right now. This Thursday thing, so you have two things happen. You have Wednesday, you have the Fed's supposed to lower rates by a quarter. Thursday, you're supposed to meet, as Xi Jinping and President Trump are going to meet and talk about, solidify this deal that we're seeing. So whatever comes out of that deal, you're just going to see some movement there. And also, too, you have the Supreme Court this week hearing whether how the tariffs, right? The legality of the tariffs that we see right now, some, all, or none, right? What's that look like as far as that goes? So there's a lot of stuff happening this week that could really, really catapult the price of everything: corn, wheat, cotton, soybeans, cattle, hogs, the whole deal, right? We can see a big move, a big run up, big run down, right? Whatever happens now, I think it's going to carry out through the end of the year because of this is how it works. Typically, when you have a big catalyst at one of those points in there, you typically see a movement that lasts a little while, right? That you're going to see up or down movement and those kind of things. Or you get to a technical spot and it kind of stays there for a while and things move through. Let's just assume that everything moves in a positive direction. We start banging through that 450 on the board, right? And we start watching things move along. Does that change for me? Does it change when I'm looking at end of the year? Does it change things I think is going to happen? I don't think so, right? And the reason I say that is whatever producers do right now, there's a lot of catch up they have to do with the banker, right? And they have to do some stuff there. They're going to look at solidifying, putting some money in the bank, getting things kind of locked in, move things forward. Now,
see if we can be here next year type of deal.
That kind of, yeah, exactly. Now, does that change what happens the first quarter of the year? I think so. I think they're going to get their deal thing, because back to what you said earlier, right? It's either all the guys I've talked to, hey, this is the best crop we've ever seen, or hey, this is not, we're kind of rough this year, right? Looked great from the road, but once we got out in the field, we realized that there's about three kernels on every cob, type of thing. And I've seen a lot of that on various social media posts. So going into the end of the year, I don't think it changes much, right? I don't think it pushes people over the edge. And, oh my God, we're going to go out and start doing stuff now. I think it solidifies some financial situations that we see out there, pushing that true buying decision making into that first quarter of the year. Maybe if they have any a revenue they want to defer to the next year, there could be some stuff that you could see happen that first quarter. But I do think the first quarter pushes things forward. I don't think it opens up a big, we're going to buy a bunch of new. I think it helps kind of dissolve some of this used equipment in the marketplace. That's my take.
Question. As you said, it might, an uptick to end the year on might solidify things and push decisions into first quarter next year. We talked within the last couple of weeks here about there will be some year end, but it's not tax buying. It's I've put off the have to till now.
Sure. Yep.
I got through the year with the have to.
Yep.
Now I have to.
Right.
That business, is that what you're saying is going to go into first quarter? Or do you think that is its own business that will still be in the year and additional what could be normal year-end business? Is that what gets shoved into first quarter? Which one of those, or a combo?
So I think if they're going to have to do something anyway, that's going to happen in the same trajectory that we're in now. I think the longer term strategic buy, hey, this is my combine for the next 2 years thing. I'm updating my combine, updating my tractor, whatever it is, into my quote unquote normal roll cycle, whatever that might look like. I think that if it was going to happen in the fourth quarter, I think some folks are going to sit back and say, hey, you know what, let's take a harder look at this in that first quarter of the year and let's see what's on the market then, and make some more poignant decisions about, hey, this is what the 2026 cropping year is going to look like for us, what our plan looks like, and what do we need to have to kind of update. I think those discussions, instead of happening at the end of the year, are going to happen in the first of the year.
I would put a twist into that, Casey, just to look at it from a different angle of the box. If the producers have been watching for 2 years now. Things fallen. We've kind of hit the bottom, so to speak. Plenty of data out there to say it's the bottom. You know, if not, there's a 1/4-inch piece of trim laying on the floor that we're now standing on top of.
Right.
So that being said, not all buying is as bad as it is out there. Okay. Let me just say that we know. A combination of things. I think the have to buying will still happen within the year because they know where the dealer's at. They know where the marketplace is at, all of this. Calendar flips over to 26. It's not like all of the sudden we're in a new market, but everybody's going to look at it through a new lens, right? Yep. Whether things have changed or not, which obviously, unless we have some kind of crazy 2 months, it's going to be what it is. Yep. But for the guy who's been contemplating all year, he knows that machine is there at that price, and that's what we're doing.
Yeah.
For the guy who, they got done in May and the before next year, that business, I think that is what will be your first quarter next year trickle into. I think have to still happen just because maybe, and hell, Casey, maybe it's even force a habit. Mm-hmm. We get done with harvest, we go to town, we buy something.
Yep.
That's there. That's there in $2 corn. That's there in $8 corn.
Yep.
There's a hell of a lot more guys do it in 8.
Yeah.
So
yep.
I think both of them are there. But to your point, I think your sit still and trickle that into. I think those guys could be a year-end grab.
Mm-hmm.
There again, it depends. What's the dealers doing? What's the auctions doing? What's out there? What are they after that's out there, and where's it at in the marketplace? That'll be the number one factor, I think. But to your point, I could see that trickle going into first quarter, like you said. I could also see it hanging back and going, hell, let's just grab it.
Yeah. Let's hypothetically throw this out there, and I think this changes the landscape a lot. So let's just say we go from,
and it's impeccable timing at the end of October for all this to happen.
Yeah.
Here's what we're going to do. Let's shut the government down in 1st of October.
Yeah.
Have everything be a shit show except cattle.
Yeah.
Then we're going to bring in some cattle.
Yeah.
Screw that all up. Then I'm going to go to China.
Yeah.
And we're going to fix it all.
Yeah. He's like, he's in the background going,
right.
Hooray, baby. You know what I mean? So I think if you look at, so hypothetically throw this out there. So let's just say right now we're at 431 and midway Thanksgiving time comes around, all this stuff goes crazy, everything hits like it's supposed to. We're sitting at 475 corn, right? We move almost 50 cents from 1st of October to where we're at now, right? We make a 50-cent run.
Real quick, to your point, I think your quarter in today's market is 50 cents.
Yeah, you're probably right.
I think if we would see that 475, there'd be some action.
So here's the thing I'm thinking.
Not to jump all over before you even say what you're saying.
Well, so now if I'm Joe Dealer out there and I'm starting to watch this price of this corn move the way it's moving, and I've got, I could get rid of 10 or 15 combines. Say I could get rid of 20 or 30 tractors type of thing. There's part of me going like, man, I don't know. I'd take half of those in a late December sale, and try to hit that wave as I push these through the auction right now. So I might get an extra $5,000 or $10,000 out of that stuff because of the price of corn where it's at, or the price of wheat, or whatever it is, whatever your area is known for, right? So if you're watching that movement, but here's the thing about that. It's not going to be enough equipment to make a wholesale change in the marketplace, right? Because there's not enough time, right? Now, if this happened 2 months ago,
yeah,
right, and this is August or late July, August timeframe.
This
and
is
now we're starting to see that.
Part 2.
Exactly. So you start looking, okay, well, in October, guess what we have? We've got 5 different big liquidation sales at a dealer someplace. We've got, several estate sales. We're doing all these different things. Things are just popping loose and taking off and running all the way through October, November, December.
Right.
Totally changes the landscape. Today, now the time frame's so compressed. Not to say you couldn't do it. I've seen crazier things happen, but that time frame is so compressed now that it's hard to sit back and say, hey, you know what? We're going to see this big kind of thing up. Now, does that mean that it gets pushed off into the first quarter? We're seeing some February, March bigger sales if prices stay strong, because now you got to remember, we're going to have a January report come out that's going to go back and go all the way back to August, right? And redo all this stuff that we've seen happening now. What's that look like, and how's that play into that? Does that add more on top of it? Does it throw a wet blanket on the fire type of thing, right? So if you watch all these things take place and run through, that first quarter of the year, to me, when I look at that, there could be some movement that we probably, if all this stuff coming together, if all this stuff didn't happen, that's why I'm so kind of fired up about the first quarter, is that there's not enough time to adjust in the last quarter of the year, that those plans are going to be made in that first quarter of the year, assuming that we see a big upheaval in price.
25 is going to end. Yeah, you're basically saying 25 is going to end status quo of what we're doing, just because we don't have any new information to fix anything, to change anything.
And if you had it today, oh man, today things are going crazy. You still not enough time to get to, not to say there's not enough time to get some bigger auctions, those kind of things happening, because you can do that. But I'm saying the volume of which, right? If you went to Big Iron and Stephus and all these Purple Wave and all these different people, Merritt and all them, and you said, hey, guess what? We want to have a big sale. They're going to say, like, you thinking like the 25th through the 28th of December? Like, what are you thinking right now? I mean, because that's about how long, because you got to market it. You got to get everything in front of people. It's not like you can have a big sale like that in 3 days and then have it work, right?
No, even
market, you could probably compress that down a little bit because online thing and all that kind of stuff. But it's still, though, you got to have time to market it and get in front of people.
Right. That's exactly right. Not only that, but who are you going to call that has an opening?
Right, exactly. Right. Exactly.
That can do that type of auction that has an opening.
Right. Yeah. So I think I watch this play out, that's why I think no matter what happens, 25, there's going to be some increased buying and stuff like that. Maybe if things work well across these auctions, maybe see a little higher auction values than you would have maybe seen otherwise. Sure, you're going to see some of that. But the true meat and potatoes of this thing is going to be, in my opinion, is the first quarter of the year. And then we kind of see what happens. Then I think we do have a hard stop, and then we see harvest, planting season, kind of spring harvest and planting kind of take place. And then we see some more what's happening in the marketplace August, September timeframe.
Give you a real quick different lens to look through. We get to 475 instead of auctioning those combines, because everybody's done that for the last couple of years. The new sales are substantially lower.
Yeah.
Okay. Color, segment, doesn't matter. New sales are way down. Does the dealer, instead of, we're going to get an extra 10 if we go ahead and chop these out of here, it could be hey, we got a handful of 25s is it. We attack on those, and then we actively, because we can finally move some of these machines now. They've probably been repriced if you still got them, right? Yeah. Oh, yeah. You've done whatever, got programs, warranty, rates, whatever. Do you then, you only got a handful of these 25s. You got to remember, think all the way back to like a whopping 4 years ago in normal business. And you go bang out your 25s, which then helps move your 24s, and here we are.
No, I think
I think that the all but stop of new for a lot of people in a lot of segments which is why you do it, obviously, duh. But I think that is going to be huge as we climb penny by penny by penny to flush the final flush of the glut.
But it's just like 2008, right? The Great Recession happens. The Wall Street economy goes into full-fledged collapse, right?
Bubble burst.
And if you look at what ag did, ag was coming out of a downturn, right? 2008 was like their 2017 timeframe, right? It was kind of everything kind of leveled out. Things kind of started pushing through. And what really drove that marketplace was like all the Wall Street money came into ag, right? And people bought a lot of stuff. It was just how it was. There's just a lot of things happening. Well, the manufacturers pulled way back on production, right? And it caused a 3-year problem, right? They really pulled back on labor at factories and all different stuff like that. 2008, nothing really happened. 2009, not a lot of new stuff got ordered. 2010, you started seeing a pickup for 11 delivery. You saw a bunch of new stuff hit the marketplace, which brought in a lot of late model, low-hour stuff. Same thing happened in 12. Same thing happened in 13, right? And everybody was, decided to jump off the cliff at the same time in 14. But if you watch how that whole thing happened, it was, you saw at the time would have been what, an 8R 340 or 8 345R would have been the big one at the time.
Yep.
Those tractors, when they came back into play, like 8530s, 8430s, those kind of machines like that, those 30 series machines, that stuff. There were times we were trading 125% of what they bought them for. Right? You know what I mean? Like it was, and that the reason for that was you couldn't.
Thanks for running that. Here's a check.
Right, exactly. And the reason for that was a simple supply and demand, right? I mean, the new stuff wasn't there, so I'm gonna update my stuff. So I'm gonna get the late model low art thing to at least pass me through till I get to my new one, right? And what happened there was the same thing that happens I've watched this happen so many times. You had this 25 or 30% premium put on something because, oh my God, we need to sell it. I want to buy. I have to buy because I got tax things. Plus at the same time, that's when they rolled out Section 179, double depreciation and all the stuff that went along with that. And all that stuff happened all that same time. Okay. Well, I've got decent crops. I've got a lot of money. I've got an incredible tax program I can take advantage of. I got to go buy something right now. What's the easiest way to do that? Let's go buy at the time, a $250,000 tractor, and I can shock that by now. I can depreciate that twice now, right? So now I'm actually have $500,000 out there. That changed the landscape, right? Oh, and by the way, interest is 1.9%.
Yeah,
right. So all those things kind of happened along what they did. Drove the used equipment marketplace like crazy. And that's when you saw happen in 2010. Okay, so now we can order new now, right? And they're like, yeah, we're building stuff in the parking lot too, by the way.
Right.
So you guys know. And so now we've got this huge build slots and everything that we have. We're back full go. 10, 11, 12, all the way through that. And then falls off the face of the earth, and the same used equipment values were still being put on those machines into 2011, 2012 timeframe because the market was still bearing it. But lo and behold, as those new machines started hitting in, again, it's because it's a year, everything takes a year.
Yeah.
Those what the values that you were putting on those machines, 9 months would come by, and guess what happened? Oh, we got more supply than we had demand last time. Oh man, we got more. Everything is just taking place the way you see it happening, and it's just now supply is building, demand staying the same, supply is building, demand staying the same, and it's just driving those prices down inch by inch by inch, and then you have a catastrophic reset in 2014, right? Now we'll see something similar to that. I hope it's not nearly as crazy as this one is. I think a lot of that is I don't see a marketplace where there's a ton of new equipment being sold again.
No,
because of price, right? You're limiting the number of people that can go out and buy a new piece of equipment, right? It's because simply by price. What scares me about this next run up is the supply that's out there on the marketplace right now. How is that affected by what I can add to my my sprayer, what I can add to my planter, what can I add to my tractor, what can I add to my combine.
As an
that
upgrade
gives me,
kits, you mean?
Yeah, as an upgrade kit that gives me the technology that I want to have at a fraction of the price.
Right.
What's that mean for the current supply of used equipment sitting out there? I really think the first 26, 27 time frame, we clear a lot of this used equipment off the space. But once you start going past that, what's that look like and how's that play in? It's a different conversation than what we've ever had before. And I think that's setting the table right now. We're setting that table for what supply look like in 2028, and how does that affect your used equipment space, used equipment market value on what you have on the lot and what you have on your farm. How's that value look like in a couple of years from now? I think it changes the conversation a little bit.
Yeah, I agree with that.
As much as I don't want to have that conversation of, well, we've got 5,000 planters on the market, for example, right? And we've had 5,000 planters on the market for the last 3 years, right? So what's that mean, right? It's stagnant. So you might be selling a lot of pieces here and there and those kind of things, but you still have the same number of machines out there. And that's what kind of worries me a little bit. Tractors, I think, is a different conversation. Combines, obviously, a different conversation as to what those components look like and what you can do there. But every year they come out with something new.
I think tractors and combines, first of all, with a combine,
it's the wear items, right?
Right. The wear items are going to chase you into a trade, point blank, shop.
Yeah.
Tractors, I think there's just so much of whether you can puck it or not. I think guys hit that hour range now. We've talked all year about the 750 is 15 and the 15 is 3 and all that kind of stuff. How those parameters have changed, but I think they're still going to follow those parameters in the tractor world just because you're just so damn used to it, if nothing else.
Yep. You're exactly right.
Creatures of habit.
Yep. That is exactly what I'm talking about. And when you start looking at how those things play out, the stuff that I think that are highly componentized now, planter sprayers, those kind of things, they have a different conversation
right.
than I think you have on the other side of that. So,
yep.
Okay. All right, man. Good place to stop. Folks want to reach out to you, get more information on what you know, or High Plains Wholesale. What's the best way to do that?
Well, you can catch High Plains Wholesale on Facebook and on TikTok. My personal social medias are all Aaron Fintel, obviously, and I share the same specials on there. And you can also find me on LinkedIn. Phone number, if you want to call or text, 308-760-1193.
Right on. And you can find me on Facebook, X, Instagram, LinkedIn, TikTok. I'm all over the place. Either at Moving Iron LLC or at Moving Iron Podcast, I guess, since that's the name of this podcast, would be a good place to look at that.
I think that's right.
Go check it out there. You can also find me on everything that's Farm Journal related. You can go to Farm Journal's YouTube channel to watch the video version of this. You can also go over to AgWeb under the podcast section there, and you can find the Moving Iron podcast there as well. Obviously, if you're listening to this on a podcast, you probably don't need to go to any of those places because you have your place that you're already looking at. But if you want to venture out and see other podcasts that are offered by Farm Journal, check that out there. You can see those things there. So I want to thank Greg Machiner, Pete Peterson, Sean Hackett, Andy Junkin, and Aaron Fennell for being on this edition of the Moving Iron podcast. So with that, we'll catch you again next time. Let's go to some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.